What if I told you your tax deadline just moved up 3 days because of an election? This is Kenya News Update today. Coming up, you'll discover why Uganda's tax authority is pushing for early payments, what happens if you miss the deadline, and how this could impact businesses across East Africa. The Uganda Revenue Authority is urging taxpayers to file and pay monthly taxes by Monday, January 12th. But here's the twist. The real legal deadline is still the 15th. Meet the Ugandan taxpayer, a business owner, a salaried employee. On a normal month, they have until the 15th to file returns for VAT, pay-as-you-earn, and withholding tax. But this week, everything changed. The general election is scheduled for Thursday, January 15th. That's also the tax deadline, and it's a public holiday. For 9 years, the digital self-assessment system has been in place, but now there are public concerns about internet stability during the polls. The URA issued a public notice. They say timely compliance will help taxpayers avoid penalties and interest. But here's what nobody's talking about. The law hasn't changed. The statutory deadline remains the 15th. Trevor Biwanika, an associate director at PwC Uganda, clarifies the situation. He says the commissioner has an obligation to guide the public, but this is basically an alert, an awareness campaign. The URA is framing this as a proactive measure, a way to help citizens, but some members of the business community see it differently. And then something shocking happened. Critics spoke out. Justin Osilo, a partner at TGS Osilo, argued the timing is difficult. Businesses are facing a slow start to the year and election-related uncertainty. He asked a powerful question: why don't you move this deadline ahead instead of carrying it forward? He suggested an extension would be more helpful than a request for early payment. Here's the part that will blow your mind. Failure to comply in Uganda can be devastatingly costly. If you fail to file a return on time, the penalty is 200,000 Ugandan shillings, or 20% of the tax owed, whichever is higher. That's not a gentle nudge. That's a financial hammer. The URA appears to be moving to safeguard government cash flows. They want to avoid any unforeseen technical or social disruptions. Authorities say there are no plans to shut down the internet. But the fear of connectivity issues is real. This creates a massive tension. Some say the URA is being responsible, protecting revenue that funds public services. Others say it's an unfair burden on businesses already navigating election uncertainty. The implications are huge for East Africa. This isn't just about Uganda. It's about how governments manage fiscal stability during political events. It's about the balance between state needs and business survival. Some say it's prudent planning. Others say it's pressure on taxpayers. But here's the unanswered question. If the deadline could effectively be extended by law because it falls on a holiday, why push for early payment instead of granting that extension? Do you think the Uganda Revenue Authority is being helpful or heavy-handed? Should tax deadlines be flexible during elections? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news from across the region.